My name is Yushuwa Nettles. I'm with Nettles Insurance, and today we have a very special guest. His name is Dan Bowman. We go way back. We grew up together. We went to high school together, and I think he has something very important for everyone that's watching this video to really learn about, and that is asset recovery. Dan, you want to do your introduction?
Right. Yeah. No, I'm happy to be here and talk about this. Yushuwa knows I talk about this business with anyone and everyone I possibly can. And there's a lot, there's a bit of a lengthy history as to how I got into this that I'll probably share in a little bit. But yeah, essentially, I run an asset recovery business, and so, what I also like to call it is the overage business. Right. And I teach a course called Overage Mastery. And for those of you who aren't familiar with that, and a lot of people aren't, but essentially what this is we go in and we find excess funds that's being held on usually by the government in various trusts, or sometimes from actual trustees like law offices, depending on who runs the foreclosure. But an excess fund usually from a house that's been foreclosed on and then sells at auction for more money than what they owe to the bank. And when it sells for more money than what the bank is requiring to pay off that house, that's an overage or an excess fund. And that money doesn't technically belong to any one person in particular. It truly is just an extra fund. So it's not like an unclaimed fund where it usually has a name attached to it. So what we do is we find the people who got foreclosed on, whoever was living in that house and lost it, because they're really good candidates for claiming this money. So we sign them up with us. We hire attorneys. We go after the money in courts. We petition the judge to release it to our clients. And then typically we take a percentage of whatever we get back from them, 20, 30%, depends on the case, honestly, and what we work out with them. But we're usually talking about $30,000 to $50,000 that these people who, keep in mind, just got foreclosed on, all of a sudden they're getting a $30,000 paycheck from the government that they didn't even, almost 100% of the time, usually they didn't even know it was there. And that's what makes it so much fun is, our product to our clients essentially is free money. It's the easiest product in the world to sell, as long as we can convince them it's real and not a scam. That's the biggest problem we run into is so many people, it sounds too good to be true. And even I recognize that. But once we're able to convince them, look, this money really is there and I think we can get it for you, they're usually pretty excited. So that's what it is. That's kind of the overage business in a nutshell.
Okay. So how did you actually get into this business? Like, what were you doing before?
So I have worked several jobs, but I was laid off from my last 3 jobs, not fired. I wasn't, it wasn't about my work ethic or anything like that. It was just in every one of these jobs, they didn't need me anymore. They laid me off. Okay. And I was really discouraged by that because in 2 of these companies, I had worked there for several years. Yeah. And so to be let go just because of a flip of a coin, I got really discouraged. And after that second one, because I was making probably I was making the most money I'd ever made in my life, which was $70K. Right. And $70K, perhaps in my home state of Missouri, that can go a long way. But I would say with inflation stuff nowadays in most of the US, $70K is good. It ain't that good though. And that was the best I had ever gotten. Right. Okay. And so, but I was happy with that job. But I got laid off and it was kind of devastating to me because I really felt like it was kind of messed up that happened. And I decided right then and there, what's that?
What was the industry? Was it related to what you're doing now?
Oh, no, not even remotely. It was mattress manufacturing. Okay. And it was, I was handling their waste and recycling program. So they hadn't had a lot of any kind of defined waste management program. And so I came in, saw the need and just filled that basically. Okay. So it was a lot of fun because they're now, they're becoming a really huge company and they're, I'm even still after, a long time still seeing the things I've implemented grow, which is great and good for them too. But anyway, yeah, had nothing to do with overages. I have never done sales. I have never run my own business before. I had never done any of it. And I do think that's important to say, because truly anyone can get into this business as long as you got a cell phone and a laptop, frankly. Yeah, I mean, that's all you need, really. But yeah, it had nothing to do with it, but I decided I never want to work for anyone again. I'm not going to fire myself, or I'm not going to lay myself off. So I want to have my own business. I want to be financially free. I want to make more than 70K and not have to thank someone for humbly giving me that money. Like I know the money's out there. I just got to work and try to find it. I stumbled upon the overage business. And I thought it was interesting. I researched it. As a guy who's not a salesman, I thought immediately, this is a great product. This is a great thing to do for people, because not only is it going to potentially make me money that I need, but also I'm helping these people who in some cases don't even currently have a home because they've lost it. And now they're getting all this money that they didn't know existed. So for me, it's a twofold thing. It provides some wealth. It also helps people, which is what I've always liked doing.
Yeah.
So yeah, I kind of stumbled on it pretty much by accident, but it ended up really being really great.
Okay. That was one of the questions I actually had for you. Is there a tax implication for anyone that receives that money? Do they have to pay taxes on it?
Yeah, and it's different. So I represent people in multiple states and pretty much all over the US, honestly. So it's different in every state. What I always encourage people to do is talk to their tax guy. Talk to your tax professionals, whoever you file your taxes with. And I even tell them, like, if they're used to filing on their own, like through TurboTax or something, like maybe this year hire someone who knows more about it, because I'm quite sure they would have to pay something on it. It's obviously different for me because I'm running this as a business versus them who are just receiving the funds.
Okay.
And every state and county is different. So I know that they have to pay something. I don't think it's a capital gains tax.
Okay.
I think it's probably treated more like income, but that's something, yeah, they definitely need to talk to people about.
No worries.
Yeah.
And you said you cover multiple states. So how are you actually, how do you start your research process to actually find these properties or these people or could they find themselves?
Yeah, and there's a couple of different ways. So some counties and states will actually print lists. And as long as you know who to ask and where to go, you can usually, they can sometimes provide you straight up with a list of case numbers and amounts and things like that. But in my experience, where there's the least amount of competition and where the real overages are that most people don't even know about is when you kind of create those lists on your own. So you research where the auctions are taking place. In every major city, every major county will have foreclosure auctions, probably monthly. In some states like California, they'll do them all like at the start of the year or something. But many places will do these monthly.
Right.
And if you can either attend the auctions or receive the auction outcomes from the trustees running it, right, they'll tell you, what the house sold for, what was owed typically. And from that number alone, you can figure out what the overage is. Okay. And then from there, because you usually have the house address, you can also find out details about the property, whether there were liens against the property, or, which is important, individuals who live there. Most of that's public record. Okay. So creating your own list is definitely the way to go, I think. Although I've definitely worked lists that are created for me, usually by the clerk's office or whoever. Right.
So with that, you said the client may actually have a better claim to the property or to the money, but does the bank also have a claim to it?
Yeah. So anyone can ask for it. as long as they have a reason to go for it. So for example, sometimes clients won't just owe the bank, they'll also owe a car company or an HOA or these people. So once these people catch wind, they'll usually request the funds. But honestly, once the bank, because the bank is the first people to get paid, whoever had the mortgage on that house, they're the ones who get paid from the auction funds. But if I suppose if the bank, and they usually don't, but if the bank had other like credit cards, if these people had credit cards through them or something, they could apply for the excess funds too. But I'm telling you, it rarely happens. Once the bank gets paid that bulk amount from the auction, they tend to not go after the overage like ever, even if there is credit card debt.
Yeah, and actually, because I was on the other side of that, and when I was doing real estate investing, it was more or less I would go to these auctions too, and the bank, they just want to be, they don't want to own the property. They just want to break even. They want that to be off their books. They'll write off the rest of it as a loss. They'll move on because their business is lending money. Their business isn't chasing down funds in some random account with some local government. So I think.
And to us normal people, like $30,000, that's a ton of money. But to a bank who has billions, they're not going to waste their time or their lawyer's time usually going after these things. So that's why I've noticed, I've had clients with quite a bit of debt, and these will show up usually in the court case documents. So we know it's there. And I tell them, it's like, look, we're going to roll the dice and go after this money. But technically speaking, these other people you owe, they could pull it. But usually the judge will say, okay, so I know you owe money to the tune of this amount, but I'm going to give these guys 60 days. If no one applies for this money in 60 days, then I'm going to give the full amount to you. And that's usually what happens. Nobody applies. We get the money, and it's great.
So how does the process normally take for when you reach out to the client to actually like getting their funding? Is it about 90 days, or what are you looking at?
Yeah, I would. So it's anywhere usually between 2 to 4 months, and most of that is just waiting on the court. So we petition. Sometimes we usually have to go to hearings. There's usually a couple hearings, but how courts are. They schedule hearings months in advance, and it usually takes some time from our end. Once we get the forms back, because we'll send out some forms for the clients to sign and send back to us. Once we get those back, it's immediately in with the attorneys and then into the courts probably that week. But then, it's a bit of a waiting game for the courts. I've had some cases take as long as 8 months. Okay. And that's absurd. I mean, that was a really long time for such a simple case, but most of the time I'd say 2 to 4 months.
Okay.
Yeah.
We and this before we started the recording, we actually were talking a little bit offline, and you brought up that one of your major challenges is explain to people that it's not a scheme. And I find the same thing in insurance. Like, what is your technique to keep people on the phone long to let them know, like, this is not a scheme or a scam. It's really, I'm really trying to help you, and I'm really legitimately trying to bring value to your life.
Right. And it is tricky, and some people are real quick with that off button on their phone. But I have found the best way to keep someone talking to me is to just be honest with them. I know a lot of people in my line of work will say something to the tune of, "There's $30,000. I know I can get it for you. I'm not going to tell you what it is or where it is or anything about it. But if you sign this document with me, I'll get it for you, and I'm going to take X amount of it," or whatever. And that works for some people, but I have found that honesty is the best policy. I will usually tell them almost everything I know. I'll tell them what the money's coming from, where it is specifically, and how I plan to get it for them. Okay. And then I will usually tell them as much detail as I possibly can about what I know about the case, because that builds credibility. Right. When they start hearing me talk about the judge who was over the case and the property address and what it sold for, I mean, usually these guys know this information. Right. So when they hear that I know this stuff too, it builds credibility, and they're like, okay, this obviously isn't a robot. This isn't some some guy, scamming me from wherever the heck. This guy clearly knows about the case. So that's usually what I do. Is I just try to be honest and tell them as much info as I can.
And do you find that most clients, it's not that they don't want the money, it's that they just don't know the process to getting it? Is that what you find, that you're really adding that value for them?
Yeah. So, and that's why I always tell, and especially my students, it's like 100% of zero is still zero. These guys don't know the money exists. They don't know how to get it. They don't know where it is. And they don't even know how it came about, really, because they don't understand the process of the auctions and the payouts and all that. So the information is really what we're providing people. I said this in a YouTube video I just did, talking about not being a salesman, because I try to tell everybody, you're really not a salesman. You're kind of an informer. You're informing your clients about something that's of great value to them. Right. And they're going to pick up on that pretty quick, because everybody understands the value of money. And so you are informing them of what it is and what you can do for them. And it really is that easy. I mean, you don't have to use gimmicks or sales tactics or really anything.
Yeah.
So,
the ideal business.
Yeah.
You mentioned the course. How long is the course? What does that training regimen look like? And how much you offer for?
So right now, the course is, I think it's 29 videos long, and some of those videos are, I think up to an hour long. It's not, but I will tell you, it's not crazy extensive, and you can go at your own pace because I have all the videos set. Some course creators like to spread it out over several weeks. I decided to give my students the opportunity to just go at their own pace. So I've got all the videos there. They can just watch all the training videos as fast or as slow as they want to. But yeah, I would say probably close to 10 hours worth of actual content, teaching them everything they need to know. And then it is kind of an ongoing thing, because as certain laws and states change, or as certain new techniques or things come out, I like to post additional videos. So it is an ongoing course. They'll have everything I know about the overage business and everything to be successful now. But as people ask questions, and this is also something I encourage, if enough of my students ask the same exact question, well, I know to make a video on that now, because it's like, okay, maybe I didn't describe this well enough. But so far, it's been pretty straightforward, and I think people have gotten it. So the course itself, I think it sells. We had been selling it for upwards of like $5,000, but right now it's priced at $2,500. The hope, and sometimes we run other specials, but the hope is that because we've lessened it considerably, we're hoping that we can get a lot of testimonials and things from students. And I want to see those checks. I want to see my students holding that check they get in the mail that says 50K or whatever on it. So that people can see just how legitimate this is, and how doable it is. So yeah, that's kind of what we got going on right now.
Actually, so when I actually started going through your website and everything, what I realized, and it's the other half of it, you work on getting people their money. What I'm trying to sell people is a product that helps them capture that money and lets it grow for them long term. And that's why I thought it was a good reason to do this video. It was just to address how you capture your money, because most people we know how to spend it. Everyone knows how to spend money, right? But we don't know how to keep money in our personal economy long enough for it to grow value for us over time and for the next generation. And that's essentially what Optimized Whole Life Policy does. You get this lump sum of money, you can set up a policy, you do a one-time payment or a two-time payment 2 years in a row. That's it. You don't have to pay a policy for 65 years. It's not necessary. And it's really having an insurance agent that's willing to work with you, take that money, put it somewhere that you still have access to it almost immediately. Within, I would say, 2 to 3 weeks of your policy closing, you have access to the money again. It's not like you just spent it and it's gone. You spent it,
Yeah.
you put in this policy, you've now bought a death benefit, a guaranteed death benefit that your descendants, your beneficiaries will get. But now you can use that policy as essentially a personal line of credit. You can use it and then you can pay it back. You can use it and then pay it back again. And what I actually tell my clients, and this is what I do too, I put money into my policy and then I use it for buying real estate. I'll say this year I'm gonna save $10,000, $15,000. I'll put it in my policy. And then at the 12th month or whatever case may be, I'll take 10,000 out and I'll put it as a down payment on a $50,000 property. Seems small,
Oh, wow.
but if you do that year over year, you're basically adding almost, depending on the property, you can add about $10,000 of additional income year over year for the next 20 years. By the time you're ready to retire, if you have a pension, great, but you now have a steady stream of income. You can always replenish your policy and you will pass on real wealth to the next generation tax-free. And that's where I'm trying to get people to understand it. And for me, again, I primarily focus on underserved communities. I was originally working or talking with the guy who set up my policy, did it for people with high cash value. I've been saving for years. I got in the military. I basically had nothing to spend money on. So I kind of spent a lot of years saving. Everyone doesn't have that luxury. So being able to use your money more than once is essentially the key to growing real wealth. And for me, I was like, I believe that whole life and using it this way is more effective, I guess, than TSPs or 401ks, because if you borrow against that policy, you don't lose the compounding. You don't lose the opportunity of the.
That's what I was hoping you'd get into, is the compounding interest side, because we were talking about this, but I think before we started recording, but it's like schools don't teach about compounding interest or interest at all, or saving money or finances in general, or generational wealth type practices. So I was hoping you'd get into that, because this is really the steps where you can take this money and actually build it, and not just put it in a savings account where you're getting what, 1% a year or something, which doesn't even include inflation.
Less than 1% now for most accounts. And actually, and this is the other sales point. Everyone, we talk about liquidity, and a part of whole life is it gives you that liquidity. I can make a request. I can basically, when I make a loan to my insurance company, I have a policy with Guardian. I have a policy with Northwestern Mutual. I can make a request on a Wednesday, and that money will be my account either Thursday night or Friday morning. So when it comes to making a big dollar decision, having a day break is actually a good thing, first and foremost. But it also allows me to, I can reach in and I can grab my money whenever I want, but that money is also protected from creditors. If your money is in a cash, a whole life policy, it's a life insurance product. Technically, that money belongs to your children or your beneficiary. So creditors can't reach into that. For most states, actually, they can't really reach into that. If you file for bankruptcy, your whole life in most states doesn't get touched either. These are an asset that you keep no matter what your other financial situation is. So it's a great place to keep your money. It's a great place to store your money. And let me be 100% clear. A lot of people talk about whole life as an investment. It's not an investment. Yes, if you pick a good policy, it will grow for you at a guaranteed rate. Right now, as of this recording, it's a 4%. But by January 2022, the guaranteed growth rate is turn to 3%, because the 7702 laws just changed with the IRS. And a lot of the major carriers are changing their policies a little bit. But 3% guaranteed as a floor is still a very good way to store money. I mean, it's better than any bank account you're going to get.
I was going to say, I mean, it's better than what the alternative is, frankly. Yeah.
But money is, and this is the thing I think they don't teach in school either. Money requires velocity. If money stops moving, it loses its value. That's why we call it currency. It's literally in the term that we use for it. And the idea isn't just to make a savings account. It's to put this in here and then identify where you think you can invest money to get the best returns. Some people like stocks, some people like real estate, some people like investing in small companies. It doesn't really matter what you do. Just have an understanding of where you want your money to go once you've captured it. Once it's captured, you can go and reuse it. Just keep your cycle going, keep replenishing it. If you keep on working with your regular job, keep putting money into it. Keep building that savings account, because when you need access to $10,000 or $20,000 in 3 or 5 years, it's there for you. You don't have to get a credit check done. You don't have to, there's no pings on your credit report. this is your money. You are loaning to yourself and you're responsible for paying yourself back. So you have that money available to you again in the future. And this is really, controlling your money is essential to growing wealth. And that's, it gave me some financial freedom. I'm not where I want to be yet, but I'm definitely on the path, and I have the freedom to do so. I have the freedom to sell insurance, and I don't have to sell insurance to basically, I don't have to be the sales guy on the phone. If you don't want to buy a policy, I'm not going to pressure you, because if you don't want the policy, it's never going to do for you what you want to do anyway. You have to know what you want, and then I'll help you get there. But there's no pressure for me. And I'm like, I can wait 6 months, I can wait 5 years. It makes no difference to me, because I don't live on my insurance commissions. And that means in that way, I'm an agent that's very free. And
that's a good point. That's a good point. Kind of a good point to make to future clients, though. Like, a lot of people do live off commissions, so they are motivated to sell whatever, however they possibly can. So to have someone who doesn't have that burden, you're going to get the best policy and the best custom thing that you need for you.
And also, I tell clients all the time, if I don't think the companies that I work with will provide them the best product, I can generally tell you what company will sell you the product that you're looking for to meet that need. And I don't mind passing along a client, because it's not about me. And I signed a fiduciary agreement with all my clients, because I found it means nothing. It's very easy for me to say, I'll be your fiduciary. But for a lot of people, it gives them that sense of security, because I'm like, you could take me to court, because this is a signed contract. Right. I will sign an agreement, say, I'm going to do whatever's in your best interest, even over my business profits. Because for me, it's a passion. It's a passion business. I do this because I really care about it. I don't do it for money. And I think that's also what's going to help the business grow in and of itself, because I'm doing it because I want to do it. And I really think, I think everyone should have insurance to some degree, because I think everyone's valuable. Everyone's life has value. And we insure everything else. We insure our cars, we insure our homes, but we don't insure ourselves in most cases. And I think we undervalue what makes our lives important. I mean, if I die tomorrow, my daughters are not going to say, hey, I'm glad dad had an insurance policy on the house. They're going to be like, we miss our father. He was valuable to us. He brought joy to our lives. That's what makes them happy. And I think people need to remember that sometimes. You step back, because we're treated like employees, which are products of the company, and we forget that we're valuable. And bringing that human life value back to people, reminding them that they're important, I think is an essential characteristic. And that's why I push life insurance, specifically whole life. But I also believe there's value in term policies too, depending on what you're doing. And I work with clients across the spectrum, depending on what they're looking for, what they want to pay. I always find something for them, or I'll present them options and they can choose. And I'm not going to pressure you one way or another, but I will give you my full perspective, because I have experience. And that's basically what I'm also bringing to the table. I'm not just an insurance sales guy that came out of high school and that's all I've been doing. I was in the military. So for veterans, I understand what it means to not be able to get insurance while you're serving in the military, and what benefits that policy can have after your time once you get out. I understand what it's like to live as a diplomat overseas, and what that looks like for your spouse if something happens to you when there's a natural disaster or a political uprising, and your family has to come back to the US and they don't have any real financial support underneath them, other than, maybe what you saved up in your pension plan, which they also have to pay taxes on. So and this is something else I will point out before I stop talking about this subject, is we talk about pension plans and retirements, but what I realized that when I resigned, that money doesn't come to you immediately. A lot of people think they're going to immediately retire and the pension plan is going to be put in their bank account and then they're ready to go. You're talking about another 8 to 9 months. You need to have a savings of some sort that buffers that time period. If you're not 59 and a half, you can't even access that money without penalties for a lot of qualified plans. So you have to, or if you lose your job, it can disappear completely, or it could become a pot of money that you can't grow any further because you're not with that company. And there are these different considerations, and because I sell to small businesses as well, and this is a strategy for planning for retirement, planning for a business succession. Who's going to take over your business after you're gone? How is your spouse or your partner going to find someone to replace what you brought to the table?
Right.
There's a lot of value to life insurance, but you have to think about how it fits into your financial objectives. And that's kind of that's really what I'm trying to educate people on. That's what most of my videos are about. And even our ebook, if you go to our website, you can actually get the ebook, and I basically break down and compare. Like, there's nothing wrong with a 401k or an IRA, but it was never designed to be the end all be all product for anyone.
Oh, and there's so much better. Like, I'm glad you brought up the 401k briefly a couple of times, and I got rid of mine. I got rid of it because people think they're going to retire off that 401k, and it's like, can you imagine if you retire at 64? Let's say you live till you're 90, hopefully, right? Let's say you live a good long time. I mean, that 401k, even if you got a couple $100,000 in that,
or $1 million,
that's not going to carry, or even $1 million, that's not going to carry you very far, which was why it's so important to start now with using these strategies, investing, making your money work for you, and everything Yushua's been talking about. But yeah, this is something that I feel very strongly about, because so many people I talk to, even coworkers and even family members, they rely on that 401k like it's their savior. And it's like, man, you need more money than that if you're going to retire at 64 or 65,
I think, and what we hear, and most of this, because I read financial articles all the time, I'm also very curious of what people are teaching on a consistent basis. And mostly what I understand is people who are solely relying on their 401k for their retirement, they're planning on retiring forward. And they don't realize it, but by the time you reach retirement age of 65, 70, if you wait a little bit longer, first off, you only have so many years before you have to take that money out. And you're not going to live, exactly. If you live to 90 years old, at 75, 80, you were probably forced to take that money out, all of it, or you're going to get taxed at a higher rate because the government wants their deferred taxes. And taxes will always continue to increase. And so everyone's like, oh, well, I'm saving now, I'm deferring tax now. I'm like, yeah, but this is the cheapest tax bracket you'll ever be in the sense of how much it'll actually cost. That money, as it grows, will be in a different tax bracket altogether. And it takes a lot of more finessing to kind of circumvent those taxes. And it's not really worth it in a lot of ways. I think, you can find there are other tax deferred vehicles, even IRAs in some ways are better. And as you've seen, if you've been watching the news, a lot of mega billionaires have basically been able to get a lot of money to these because they've just been converting it over. But the reason they're doing that is because it's a tax deferred vehicle, but they want to get more money in than most people could possibly do. And again, not many of us can put $1 billion in 10 years into an IRA, of course.
Fingers crossed.
We can always dream of these things, but it's not realistic. For most of us, it's just putting a little bit away, but putting it into a place that it's going to grow, whether we use it or we don't use it. And then if we want stocks or we want to put it back in a Roth IRA, we can take a chunk of money and just dump it in there year over year, max it out that way. But now that money's now worked for me twice in 2 tax deferred accounts instead of just one. But you have to think about it, and then you just replenish one and take another chunk out the next year and do it again. So both accounts are growing, and they're growing tax deferred, and you're getting the higher rate of return with a little bit more risk on the IRA side, but you're getting guaranteed returns on the life insurance side. And it's using your money. Just use your money more than once. Keep turning it over. It'll grow for you.
That's how it has to happen. Yeah. That's exactly right. So I feel like you've explained this extremely well, but I guess if I was a new one of your potential customers, if you call it that, or someone wanting to sign up for life insurance, I guess if you had to classify this into a top 3 or top 5 reasons that someone should do this, because we've talked about a bunch of things.
Right.
Do you have, like, right off the top of your head, like maybe a top 3 reasons that, like, whole life or whatever really is a good idea for people who have never done this before?
Right.
Don't know much about it.
Of course I do, because I sit here and talk about it all the time. Whole life is by far the #1 way to pass along wealth from generation to generation. A lot of people think it's real estate. And again, I own real estate. Most of people can't even afford real estate now, but it really is life insurance. Because let's say you and I we took 2 different paths. You said, I'm going to just buy my personal house, and that's what I'm going to pass on to my children. When your children inherit that property, they still now have to pay the property taxes. If there is a loan outstanding, they need to cover that mortgage. If there is damage to the property, they need to pay for that as well. I can get the same value in a life insurance policy, probably that will grow in appreciation at almost the same rate, depending on how you set the death benefit. But when my
Mhm.
descendant or my beneficiary, my wife receives that money, they don't have to pay property taxes. It's tax free. And now they have this lump sum money that they can say, well, I have passion for investing in, I don't know, technology businesses. I'm going to take $300,000 and I'm going to make an investment into technology for the next generation. That $300,000 can potentially become 10, 15, $20 million over another 50 years because they use it.
And and
And
if I don't want to, I don't like interrupting you. You're
go
especially when you're
ahead.
describing the stuff, but you made me think of something too. Just going back to overages, what I do.
Mhm.
You talked about that real estate really isn't the best vehicle for generational wealth and things like that. I could not agree more. I can't tell you how many of my clients are actually descendants
Mhm.
of someone who has passed away. They had this house, but the mortgage wasn't paid off on it, or it, like you described perfectly, it has damages to it, and so they just let it go. The
Right.
kids just decide,
We can't
let
afford
it get
it.
foreclosed on. I'm not going to deal with this house. They couldn't sell it. It was maybe in a location that maybe was a booming location 20
50
years
years
ago,
ago,
but right
right?
now there's no buyers,
Right.
right? No renters, no nothing. So the house gets foreclosed on,
Right.
sells for dirt cheap at auction. And that's a really high amount of my clients, is because they got this house, but they didn't want it and they didn't use it, and it
Yep.
didn't provide them or their families with any real value. So
Right.
I'm really glad you brought that up.
No,
So I'll let
it's
you keep going.
exactly true. And
Yeah.
the other thing I tell all my clients is do with your money what wealthy people have always done with their money. When I talk about whole life, the Rockefellers used whole life to build their initial nest egg so they could create the Rockefeller, what we know to be their entire trust. It was built on life insurance. Major organizations, no, mainly the nonprofits, use a version of permanent life insurance to basically save their money. Harvard has an endowment. They call it an endowment. Harvard has an
Mhm.
endowment for several $billion. You're Mormon. Actually, the Mormon church does as well. They hold it in
Oh
permanent
yeah.
life insurance because these, for them, they're a tax exempt organization.
Right.
So endowments tend to
Yeah.
be taxed at a normal rate. But if you're a non-exempt, a tax exempt organization, it doesn't matter. You can have it,
Right.
and as people pass along, the wealth just keeps on growing. And
Hmm.
that's where, like, so they'll put it on the pastors or the deans or whoever. They'll pay out their pensions from that policy, write it off on the back end, and then when that person passes away, that money's replenished, so they don't lose wealth, they gain wealth. And
Right.
it's a,
That's
yeah,
perfect.
it's a huge strategy for it, and it's
Yeah.
do with your money, because the banks do it too. Because for
Hmm.
the entire financial system in America, the backbone is insurance. Insurance ensures that businesses, banks, everyone has a safety net. And for banks, it's called bank-owned life insurance. For corporations, corporation-owned life insurance. For banks, it's a requirement for them to have their reserves in a safe, secure place. And they always use life insurance. And then they lend out that money and they grow it that way.
When I think I've heard life insurance is like one of the only markets that has never, even when the markets crash.
They
I wish I
always,
could remember who said this, because this is going to fall flat, but because I don't remember who did, but it's like the only market that has always been consistent, even when the stock market crashes, even when there's crazy inflation,
because
life insurance has always held
they have
true.
very secure investments. I mean,
Hmm.
they don't hold a lot of, they hold very, very secure investments. And I
Yeah.
like, I can't express that enough. If you look at their portfolio, they'll have commercial real estate as some of their great holdings. Like I think the Empire State Building is owned by New York Life in part,
Oh, really?
or like the majority of the shareholder is probably New York Life,
Hmm.
MetLife, or a few others. Like they hold a lot of these valuable real estate, and then they turn around and a property manager manages it for them, but they own it, and they've owned it
Yeah.
for years. They didn't buy it in the 50s or 60s. They bought it in the 1800s.
Oh,
So
wow.
their value is, it's firm and it's fixed, and they put their money in things that they know are going to do well. It's very conservative. But if you do buy life insurance, and this is what I tell everyone, always buy with a mutual company, not a stock company. And the reason being is that when you're a policyholder with a mutual company, you own a share of that company. That's why you get dividends back. If you own with a stock company, you don't get dividends and your money doesn't grow the same way. I have a policy with a stock company because it was a federal benefits conversion, and that's MetLife. That policy will not grow on par with my other policies. So I have 4 policies on myself because I was both trying out different things. I was using all the things that were available to me, and I was trying to see what I could basically offer to clients from an experience standpoint. And I put all these things in place, and I'm watching them as a case study on myself over the next couple of years. I have that benefit, but I know that people will benefit from that information down the road. Stock companies are not good for using high cash value life insurance. Mutual companies are, and there are a lot of them. There are a lot of major ones that we most know about: Guardian, Mass Mutual, Northwestern, New York Life, and then there are some of the smaller ones. They're more regional. United of Omaha, Forrester. There are a few of them that have actual whole life products that they do sell, and they do just as well. But again, you can look them up. We do research on AA Invest or Standard and Poor's, and you'll find out how strong a company is, and that should be a part of your factoring in what company you go with. But again, always work, and that's what I tell everyone: work with an insurance advisor, not an insurance agent. Now, we all have the same license, don't get me wrong, but an insurance advisor really is looking for your best interest. And for a lot of people that are really trying to build their wealth, having a financial advisor and an insurance advisor can be the difference between success and failure. And a lot of people don't have insurance advisors because they think it's not important. But having an insurance advisor ensures that every policy that you have in place is protecting you the way you want it to protect you, whether it's your house insurance or your car insurance. Like, you have the coverage that you actually need and both want. And there's no weird terms that will deny your claim when you need it most. And there are a few companies out there that do that. So, and then the last thing I'll tell anybody that really wants to know is the most famous investor in American history built his wealth on using insurance, and that is Warren Buffett.
Warren Buffett, okay.
Warren Buffett bought a failing textile company, and he basically reinvented it. And a part of how he did it was buying Geico. And he used the insurance and then reinsurance to have what they call float, and that is the premiums paid before claims are paid out. And float is not taxable in the year it's paid. It's only taxable when it's considered earned income, i.e. a policy terminates or a claim is paid out. So he has years, 15, 20, 30 years that he can have money that he's building wealth, he's investing with it, he's growing it, and it's completely tax-free. And then he also, pays it out of the far end, but he's already used it several times over. So it's cheap financing for other ventures. That's how you build wealth. So finding ways to make your money, getting money that's cheaper for you financially, and then you can create value out of it.
Was it Warren? Again, I don't want to misquote people. I'm terrible with memorization on this stuff, but wasn't it Warren Buffett who kind of coined the term that, if you'll always stay broke if your money's not working for you even while you sleep? Something like that.
I heard something to that effect, but
have you sure heard that? I can't remember if that was.
Yeah, if you have passive income, and passive income doesn't mean you don't do any work. I think that's a misconception about passive income.
Right.
It just means that your money being made does not require you to get up every morning and do a specific job. I can focus on for example, my real estate. I do my real estate paperwork and finances, I would say probably 3 to 5 days out of the month. Mostly that's either answering issues with the property manager, approving funds for some repairs, or basically just doing admin work and collecting, like looking at the data, seeing where I can cut costs in the future. That's my general work. It's not, again, I'm not doing nothing each month, but 5 days out of and not even a full 5 days, probably a couple of hours each of those days. And I don't have to, it's done. And now I can work a full-time job. I can do that in the evening after I eat dinner, before I watch my movie or work out. It takes a lot of effort once your systems are set up. And a lot of people don't know how to set up their systems. And this goes for money and everything else. Don't set goals, create systems. Create a system, the system operates, and you're in a much better position because now you're free. You have time to do the things you want to do. You want to read that book, you have time to go do that now. And I think for me, getting out of my job was it was one of the hardest things I did, resigning from a job that was, a 6-figure job. It was a good job. But I realized that it also prompted me to realize, to think about my life a little different. What do I value? And what is my time worth? So I had to come up with a new approach to life.
And for those of you watching this, I know Yushuwa is not going to toot his own horn, so I will. He just talked about giving up his job. He talked about this briefly. He was a diplomat, but he was telling me this a little earlier that reason he stopped doing that job was because he cared about being with his family. This job needed him somewhere pretty far away from where his family was, and the decision was, I don't want to leave my family just for a job. I can, money's not worth it. My time with my family is what's valuable to me. That's what, Yushuwa was telling me. So I think that's important to point out, because a lot of people who get life insurance, who do these things, they're looking for financial freedom, not just for themselves, but for their families. They want their kids taken care of. They want their wife taken care of. They want to be able to spend that time that they won't get back with them, which is what financial freedom does. And that's what drives people like us into these kinds of things, is trying to find that better way. We talked about, not in so many words, we talked about selling your time for money. Essentially, I worked a manufacturing job. If I did not show up to work, I didn't get paid.
Right.
Yush was bringing up, these kind of investments and what you can do when you manage your money properly. You can have your money work from you, even if you don't punch that time card. It's still earning you money. Real estate can typically go up in value, even if you don't even have renters there at the moment, for example. But there's lots of ways to do this. And then again, with selling your time for money, I tell people all the time, I do a couple of things, but with the overage business, I've never worked more than 4 days a week, 4 hours a day doing this, because it's not necessary. And that's not to make me sound lazy. It's just that I will work entire lists, get a bunch of clients in less than 4 hours, and it's like, I'm done. There's no point in doing this anymore because I've got all this going on.
Yeah, efficiency. Everyone thinks working harder or working a lot means you're working harder. That's not actually always the case. It is in some jobs, don't get me wrong, but sometimes it's more about efficiency. It's what leans. So I was also a certified Lean Six Sigma black belt. So I was very much trained in that methodology of efficiency. I don't want a team that's going to work 80 hours a week. I want them to be able to work in a regular 40-hour week, and you get whatever the project is to get done, but also have time to themselves so they are refreshed and ready for the next project. So it's kind of,
and that's something COVID has kind of taught people too, by the way. More and more people are working from home, and the companies are realizing this job that they were doing for 40, 50 hours a week turns out can be done in less than 4 hours a day. If they really, it was a lot of busy work or pretending to be busy when there wasn't a lot of work to do. So anyway, another good thing about working for yourself, you don't have to do busy work.
Exactly. I used to drive me crazy, even in school. Like, busy work has never been my thing. And the Marine Corps too. Actually, they would make us do like police calls. They just make up stuff sometimes.
The military is notorious for that. My dad was Navy. I know.
So they really drove it home to me that I never wanted to do busy work unnecessarily ever again. And I really took that to heart as I got out. I was like, I'll work hard for anybody, or if I'm gonna trade my time for money, because there is a time arbitrage, time like equation that you can basically apply to your life. When you're young, you have all this time in the world. Use your time, sell your time to other people, get money. Once you get that money, use that money to get more time. And when you use that format, you can become financially free. Or if you want to become very, very rich, you can do that. But a lot of people need to remember too, if you want to be the Elon Musk rich or the Mark Zuckerberg, there's a trade-off. They have to spend, when I've looked at a lot of studies, people at that level, they spend true 80 hours a week working.
Oh yeah.
So they may have all this money, but they also don't get to use this money.
Yeah. And I was thinking about that just the other day, because I've had, in my mind, I've had a lot of wealthy people that I've known in my life, friends, even some family, relatives, whatever, church friends. And most of them had that money because they were either CEOs of their own companies, or which, those guys put in tons of time, the good ones. Yeah. Perhaps not all CEOs, but the good ones will put in a lot of time. Maybe not the CEO's son.
Exactly.
But anyway, but like the lawyers, the doctors, attorneys tend to be fairly wealthy, but those guys also pull 80-hour weeks. Doctors, especially during pandemics, they pull crazy hours, and they've got this money, but they have to devote quite a bit of time to it. So there are definitely methods to getting money. The question is, how do you want to make your money? What drives you? Because truly, I think being a doctor would be a very fulfilling job, or even a calling in life. But not everybody wants to do that, but they still would like to make some doctor wages,
And
you
just
know?
real burnout. I mean, my brother-in-law is a doctor. He's a neonatologist.
Okay.
He works crazy hours. Even as a diplomat, you're never off work when you're in the diplomatic life. So yeah, it's a good paying job. There are a lot of perks and benefits to it, and you meet a lot of interesting people and you do a lot of interesting things, but it's a 24/7 job. I mean, it could be middle of the night, something crazy happens, we have to respond to it, whether it's an American citizen needs assistance, or there's something happens at the embassy or in the country writ large. Like we left Myanmar, and a year later it descended into the military coup happened the following February. So I'm like, and I have friends that were still there when that happened. They were like, it's just crazy. I mean, you don't know what's going to happen, and it could be any job. If you're a lawyer, my wife was a lawyer before she became a diplomat, and the same thing. Like,
Wow.
It could be a lot of time, and you burn out. You cannot work 80 hours a week every day for 50 years.
Not sustainable.
Okay.
Yeah. No, it's not sustainable at all. Yeah.
So you have to love it, but at the same time, you have to know that you have to have time to recover. And 3 weeks of vacation a year, it's not enough.
That's not recharging the batteries.
Right. I mean, even when I got out of the military, I mean, I did my war zone, and then I did the Marine Security Guard program, which means I was protecting embassies. That's how I got into life in the first place.
Okay.
I felt like after I got the Marine Corps in 2013, I probably slept for like 2 years. I felt like Rip Van Winkle. Like I was done. I mean, I had to deal with something like the stress of like having been in the military, like loud noise outside would make me wake up in the middle of the night. And
right.
There were a lot of issues that I was like, okay, but I need to rest. Rest was essentially my biggest. And I realized I was so tired, and that life, or being a nurse, because a nurse is another one of those jobs. It's just tiring, and you can't do it indefinitely, and also have time the way you want to with the people you love and the people you want to spend time with. And I told them in the State Department before I resigned, I said, I could continue working. I could go to Zimbabwe and do this job. But at the end of the day, when I'm 65, 70, 80 years old, however old I am when I'm on my deathbed, I'm pretty sure no one from the State Department is going to come and hold my hand and tell me how much they love me. I'm like, that's only my children are going to do that. So I'm like, I could give you all my time today, and I could deprive them of it now. But when I get to the other end and I'm on my deathbed and I want to spend time with them, what will they say to me? Will they say, Dad, you were always there for us? Or will they say, Dad, you weren't really around, so, we can't show
What's
up.
your insurance policy looking
exactly. Like I'm signed into that, right? So I'm like, and I had to put my life into perspective. I was like, what is valuable? And again, the military, was another thing the military taught me. And I don't talk about this a lot, but again, you're an old friend, so I'm like, I'm gonna talk about it real quick. It's after I did my time in Iraq, because I served in Iraq. I was a gunner. I saw a lot of stuff out there, right? But when I came back, the harder job I had in the Marine Corps wasn't my time as a gunner. It was my time as I was back in the States, and I used to basically go to funerals and present the flag to families. So I had to recite, the president's gratefulness for their loved one's faithful service, and I would present the flag, photo of the coffin, and every time we would hand the flag to someone, they would just break down in tears. And I think that had a profound impact on me mentally, on what it meant to basically lose someone, and also what it meant to sacrifice. And we talk about the sacrifice that service members make, of course, or diplomats, or all these professions that we hold in such high regard, but no one ever really talks about the sacrifice that the families have to make. And there's a huge sacrifice, whether you're a child of a veteran or a military member or a diplomat or a doctor. You sacrifice some of your childhood, some of your time, so that they can go out into the world and make the world a better place. And I think it becomes very important for us as the person going out and doing all these things to say, well, you know what? I need life insurance because I want to make sure that, I couldn't have been there for them, but I'm still going to give them some financial stability. So that's not the one thing they have to worry about.
Right.
That'll be
the last, but money really is the last thing.
But right. Yeah, money doesn't buy happiness, but it makes life a little bit easier. You can focus on other things.
And it's the last thing they should be worried about, and
Exactly.
especially at a time like that. It's like you don't want those people having to wonder now, how am I going to pay for my house, or how am I going to get food?
Where am I going to live?
Where am I going to live? Yeah.
And it's
Yeah.
and that's kind of like the gist of like what it is and why I wanted to have this conversation. Because I mean, I know you're doing a lot, and I'm very proud to see that someone that I grew up with actually is doing just as well as I am. I like it makes me actually very happy, because I like seeing other people have success. It really does. And it tells me like, yeah, my time in the military was worth something, because there are a lot of Americans like you going out there and they're doing stuff. They're making things better, adding value to other people's lives. And yeah, they make money off it or whatever the case is. But again, there's a capitalist society. But at the same time, that value is making America better, because there's a lot of things out there right now not making America better. And I won't get into politics, but but so I'm like, I really do enjoy seeing that, and I'm glad we had this conversation. We're gonna stop the video here, but if you are interested in asset recovery or looking up more, we'll have Dan's information in the description below. And if you need anything related to insurance, or you just want someone to talk to, reach out to us at Nettles Insurance. We'll be happy to help, advise, provide more information. Just let us know. All right.
Excellent. Thanks for watching, everybody.
Thank you.